Well, Jeremy Hansen here from Fox Valley Tech with another segment of Life on the Farm. And joining me today is Mike here. Mike, thank you so much for your time today. And Mike, you are the manager of Fox Valley Farm Management, correct?
Yes, I am.
Mike, tell me a little bit about what Fox Valley Farm Management is.
Fox Valley Farm Management is a service cooperative that provides income taxes and accounting work for farmers in the northeast Wisconsin area.
I wanted to ask you, very simply, why do we do taxes each year?
Well, one is to fulfill the requirement to file a tax return and to report your income to the Internal Revenue Service.
But in your mind, what are we looking at doing when we start preparing our tax returns?
Well, we like to plan for the taxes for the self-employed farmers and self-employed businesses out there throughout the year.
Right, and essentially, what I tell farmers is we're trying to minimize our liability, tax liability to the federal government. Would you agree with that?
Yes, we want to know, we want to let the clients know where they're at for their income taxes and what they can do to make it different if they want to do that. Right.
So, more specifically now, talking about taxes, what are some ways that we can minimize that liability to the federal government for either a small business or a farm?
They can obviously deduct all of their operating expenses. That's most important. They can, and in the farm world, prepay operating expenses such as feed or crop inputs. They can purchase assets, and they can elect to 179 those assets or write them off. And they could also defer income if that works for them.
In your role and visiting farms, doing your tax planning, what are you seeing for our operating expenses this year compared to other years?
Operating expenses are up. Fuel is one we all know is up. Fertilizer is substantially higher. Seed, the feed that farmers feed to the cows are quite a bit higher. So those are the main areas that expenses are higher this year.
Right. And you mentioned the Section 179. Could you explain what that is in a little more detail, Mike?
Yeah, that's the purchase of a capital asset that qualifies to be written off all in the year of purchase rather than spreading it out over a 5 or 7 or 10-year depreciation schedule.
Right.
Because of the higher incomes from the last few years in the farm sector, machinery is hard to find. New machinery is still need to be built and won't be available for 179 this year. So it's hard to find new machinery, and it's hard to find good used machinery to purchase.
Right. So what are you preparing your customers regarding that?
We're letting them know where their net income is now, projecting out income and expenses, and telling them exactly what they should be prepaying, or if they can find that capital purchase, or what kind of dollar amounts they need to spend to, maybe we look at tax brackets and trying to keep them out of higher tax brackets with the prepay and with the 179 expensing.
Right. And the bottom line is we should be prepared to pay a little bit of taxes this year.
Farmers are going to pay more taxes. I think farmers should pay more taxes. That allows them to pay off more of their loans and use this higher net income to better position them financially.
Right. Mike, valuable information. I really appreciate your time. It's one of the more important topics this time of year. Just last thing is, what does your life look like from now until April 15th?
We are getting busier because we're out seeing the farms, we're looking at their books, and we meet with them for 1 to 2 hours to go over the numbers and review what they can do. And then, of course, at the end of the year, it gets really busy.
Right.
And we will be very busy filing taxes until April 15th.
Right. So, Mike, thank you so much.
You're
Appreciate it.
You're welcome, Jeremy. Glad to be on this.
Yeah. So for Life on the Farm, I'm Jeremy Hansen.